I think you need high throughput data availability, and if Ethereum does not do that, then I don't see how they're going to be as relevant long term.
Welcome to Unlayered, the show where we talk about next generation blockchains. I'm your host, Saul, alongside my co-host, Dave. And today we have the privilege of talking to Logan Jastremski, founding partner of Frictionless Capital, also has a podcast of his own, one of the oldest kind of Solana-leaning, high-throughput-leaning podcasts, which I believe is also just called the Logan Jastremski podcast. And I think has been one of the oldest voices in all of, whatever you want to call it, crypto Twitter, just crypto generally, in support of scaling approaches like Solana's, but of course there's other blockchains that take similar approaches. And I think in a lot of ways has been right for a long time, but has had to kind of fight through, lots of pushback, whether it's, in real life, on Twitter, from Ethereum maxis. And so this is an episode we've been wanting to do for a while. I think Logan and his team at Frictionless have been kind of a guiding light for a lot of people in Solana, and super excited to kind of get into what you guys are finding exciting these days.
Really appreciate the kind introduction, Sal. And Dave, thank you so much for having me on the podcast. Really looking forward to this. Been watching your guys' work from afar from some time, so I appreciate the opportunity to come on.
Amazing. Now, we appreciate you coming on. There's a lot of things we can kind of get into today, but I think a good starting point is, let's talk a bit about just the state of Solana and the state of high throughput chains. It feels like in a lot of ways, there's been some capitulation on, I guess, the more ETH aligned side. But how does it feel to kind of be right? And on the flip side, I mean, are we still kind of testing out if this thesis is going to prove to be true?
Yeah, I mean, maybe jumping back to like 2022, 2023, we were kind of chit-chatting a little bit before we started recording. I mean, at that point in time, especially kind of post Luna, post FTX, if you were even remotely bullish on Solana, you were laughed out of a room. And I think for us, why we had such high conviction on generally Solana and now the multitude of high throughput blockchains, because it seemed inevitable from a true scale standpoint. If you actually wanted high performance that you couldn't really obfuscate physics, you could move the data availability around, you could move the compute around from the L1 to the L2. But at the end of the day, you still had to have that kind of compute and high bandwidth done at some point, somewhere in the stack. And so we kind of went all in even prior to 2022, just saying, hey, this is probably a architecture that we should explore, and really just leaned heavily into that even post FTX when it was deeply unpopular. I think fast forwarding to today, I mean, we had the run up in Q4 of 2023 and Q1 of 2024. And more so to me, that was just kind of, hey, maybe Solana's not actually going to die. And these high throughput blockchains may still be kind of stay around for the future. But I think as we've kind of progressed through 2024, to me, one of the more interesting things and things that you highlighted, Sal, was more kind of the mental capitulation in Ethereum's underperformance than anything else. And I think that's really just been highlighted that it's kind of clunky to use. It's not super straightforward whether you should build on Base, Arbitrum, Optimism, ZK Sync. And that's like not a knock on like any of those individual teams. There's very smart engineers. It's just when you introduce different standards and no one can agree upon standards, it just makes it a little bit more cumbersome to try to do the technical due diligence to which one I'm going to build upon. And that fragmentation, I think, just causes a lot of confusion for engineers to say, if I pick the wrong stack, then I'm kind of SOL because I did all this engineering work. And maybe it's easy to kind of copy and pasta your project because it's EVM, but maybe it's not. And so to me, that has been kind of really interesting to just watch the Ethereum community start to grapple with some of the design decisions that they've really made the last, I'd say, 2, 3 years. And the high throughput blockchains, really spearheaded by Solana, were really, in my opinion, more dumb in the fact that it's saying, hey, we're going to add more bandwidth, we're going to add more compute as you need additional scale, and we're going to scale in a large single shard. And by having a large single shard, what ultimately you're creating is one shared standard where when you use Solana or use Sui, use Aptos, Monad, say, there is no sharding. There is no different versions of the Optimism Arbitrum base. And that shared standard that everybody opts into just makes everybody's lives easier from day one because you're opting into a system that is all agreeing upon a shared standard to use. And so I've really been in awe just by some of the mental capitulation that's been happening. And I think I wouldn't declare high throughput as kind of obvious winners, but I think the trend is very clear and high throughput is going to remain the dominant architecture, in my opinion, or it should emerge as the dominant architecture going forward.
So I think one thing that's been clear now, and we were talking about this a bit earlier, versus when Solana was still a non-consensus, let's say, like in 2022, even obviously 2023 after FTX. So back then, everyone said that you need to put an order book on chain, and Solana is the only way to do it. And so that was oftentimes a very common thesis. Today, one of Solana's strongest areas of PMF is meme coin trading or long tail asset trading, permissionless creation of assets like pump fund, launch pads. And all of those markets are traded pretty much exclusively on AMMs because AMMs are better suited for long tail asset creation as well as trading. And so interestingly, there's days where Solana DEX volumes flips Ethereum. And that's become the dominant way people do DeFi and Solana. And on the flip side, I mean, maybe I'm kind of out of tune with this, but I just don't hear a ton of people talking about protocols that are getting substantial volume using an order book model. And so was this something you saw coming? And what's kind of your reaction to this weird kind of emergence?
I think in all these ecosystems, I mean, when you compare TradFi to DeFi, it's really like a spec. I mean, if you look at market makers haven't really makers of liquidity. They've generally only been takers of liquidity. And so we haven't really seen someone come in and say, hey, there's enough volumes here to actually start being a market maker on blockchains. I do expect that to change in the future as volumes continue to increase. But I wouldn't say it's super surprising that AMMs have kind of been the predominant form of trading, especially in assets that are kind of new and emerging and kind of slightly strange. And so our thesis more broadly was that, hey, if you have high throughput blockchains, meaning you have more block space, ultimately that will result in cheaper fees, and cheaper fees will ultimately enable engineers to experiment with different types of applications that would no longer previously been possible. And I think that was directionally true. And what we've started to see now is that more and more applications can kind of live within these high throughput blockchains. They're in a shared ecosystem. They do opt into that shared set of standards, as I mentioned. But there are really, in my mind, going to be no applications that are better suited on a low throughput blockchain than a high throughput blockchain. And I think that is kind of the beginning of what we're starting to see, is that people are questioning, hey, why are we paying more here? We have higher latency, worse block times, so we have larger spreads. All these kind of things that Frictionless Capital has really been saying from the early days. And it's now just starting to manifest itself within different communities outside of the Solana community. And I think that has kind of been more interesting to watch than anything else. But I don't think it's been super surprising to me that AMMs, especially within these long tail of assets, have started to kind of or have caught on. I do think the end state will probably be some combination of AMMs to get a certain amount of liquidity. Once things hit certain volumes, you will have market makers say, hey, I can actually profitably market make this. Let me start to do that if there's enough volumes, and majority of those volumes on the high trading pairs will actually be done on an order book instead of an AMM.
Yeah, and let's go with that. Let's say that order books do become the dominant way that people are trading these large scale assets. But I think the trend that we're maybe starting to see is Backpack and Cube have sort of done it. And I know Zeta are now talking about doing an L2 on Solana, where there's going to be a hybrid SexDex. And the reason is because even if Solana gets optimized as well as it can be due to the laws of physics, it can only really get down to maybe 200 milliseconds, and Binance is around 20 milliseconds, let's say. So as a result, they're sort of all having to converge if they want to be able to legitimately compete with Binance on a SexDex hybrid, if you like. So do you think that this idea that you need high throughput blockchains in order to allow trading and in order to allow order books, is that maybe not being proven? Are we instead just going to end up with a SEX with slightly better conditions around the security of it?
I would actually disagree with the first claim around that. I mean, it is technically true, and obviously true from a physics standpoint, that if you have a single sequencer with an order book, then you can do millisecond latency because it's one computer. You don't have to communicate with other computers that are geographically dispersed around the world. And so you can trade at like milliseconds or nanoseconds, which is interesting. I mean, I think one of the things that I've been thinking a lot about with blockchain architectures is you remove, quote unquote, the blockchain part, like, or the naming of it. If you strip that off and just said, is this a better product? What do blockchains actually enable for as better products? And I actually think you can have better price discovery in a high throughput blockchain than you could a centralized order book like the New York Stock Exchange. And I think the more that I've been thinking about this, one thing that I've really appreciated about Anatoly was him being really steadfast in his vision of NASDAQ on a blockchain. And I think why I'm kind of pushing back against the assertion that these central limit order books that are on single sequencers or a single computer will never be better than a global price discovery engine is because at the end of the day, really all trading is done on new information flows. And it really, prices are being reacted to, hey, something has changed in the world. Now I should change the price of this product, or I should react to that. And everything is really bound by physics. So the speed of light. Toly often uses this example of, say, an earthquake happens in Japan that has to propagate through a fiber optic line to New York if the sequencer is the New York Stock Exchange. And so that takes about 60 milliseconds, but there's no reason why that trade should not have been reflected already by the time it got to New York. So that trade happened in New York. Then that trade is propagated through the same fiber optic cable to New York. And by the time that information has arrived in New York, the price is already reflected saying, hey, this thing has dumped 20% because there's an earthquake. And so I think the end state, and I gave a talk at the Escape Velocities guys DePIN Summit recently about the end state, which I believe is going to be these multi-leader systems that allow you to cut down on the latency. You have high throughput, obviously parallel processing, but these actually are better ways to do price discovery than a central limit order book because of how information is actually propagated around the world. And I actually think this is a better product than having the New York Stock Exchange where all computers are co-located to a single sequencer. They're giving the same fiber optic cable so that no one has information advantage. And you pay hundreds of thousands, if not millions of dollars to be co-located with everybody else in the same data center. And to me, that the fact that blockchains can actually compete on this standpoint, yes, we're not competing on like millisecond latency ticks. You're competing on better price discovery when information is actually synchronized around the world is like really, really interesting. And so I think today there's a variety of reasons why teams are exploring the L2 design, and happy to get into that. But I would generally say people have underappreciated the vision of what global price discovery can actually do. And I think they're too myopic on focusing on the millisecond ticks versus, is this actually a better product to enable price discovery, which I think in the end state it will be.
And what's been your reaction to, I guess, like during periods of high congestion? I think this is one of the things that made me, I don't want to say less confident in the high throughput chain approach, but made me question a few things. Was during the spring, let's say March, April, there was times where trading on Solana was pretty much as expensive, sometimes more expensive than on an L2. Obviously that's come down since then, but so did network activity. So it could be just a consequence of reduced demand and strain on the network. In a world where we're really trying to get hundreds of millions, if not billions of people on blockchains, I still really haven't seen strong evidence that these things can handle insane amounts of demand on the network side. And so in that light, it does sometimes make some sense to like have this modular world where chains just all do one thing really well, perhaps. Maybe there's an entire chain for just one application, and so it's not affecting applications on other chains. Not that I believe it, but I think the argument got a bit stronger after seeing Solana struggle so much during the spring when there was so much like activity on meme coins. I mean, do you have any kind of learnings from that whole experience? Do you think their scaling approach will actually solve some of these challenges that they've faced?
Yeah, I mean, one of Frictionless Capital's first blog posts was about the different scaling, essentially about high throughput blockchain and why we had such high conviction and generally this correct architecture. If you wanted to separate the L2s and the L1s, essentially what we were articulating was you need high bandwidth and you need high compute. You can separate those into modular if you want, or you can integrate them. I think the integrated point of view is cleaner because of that shared standards that I've kind of been alluding to throughout this podcast. But one thing about Solana's roadmap that they've never done yet is a block size increase. And like, if you look at like Ethereum's roadmap, I mean, they started with smaller blocks and have eventually been gradually getting larger and larger blocks. And Solana is still really in its early days, I would say. Still, there's a lot of bugs with stake weight, quality of service, with trying to figure out single leader ecosystems before getting into multi-leader, how to ultimately charge fees, what is the best way to price resources. And all those bugs have kind of been the core bottleneck that the engineering team has really decided to focus on before saying, hey, let's just increase the block size limit by 2x. Because realistically, today, Solana, most blockchains are still doing kilobytes per second, which, like in Ethereum's case, they're doing less than 56 kilobytes per second, which is worse than dial-up in the 90s. And Solana was really the first blockchain that was able to do like low megabytes. And for the non-networking nerds, kilobytes to megabytes is 1000x. Megabytes to gigabytes is another 1000x. And so these are dramatically large increases in overall kind of data being propagated through the system, which ultimately is the limiter when you have these decentralized systems and need to achieve consensus, because the quorum needs to agree on the state of information. And why I'm kind of highlighting this is because there has been issues within Solana in the past, really around downtime, around fixing these bugs, but they've never done a block size increase limit. And Solana today is only doing a couple megabytes of throughput. Like, they're not even doing hundreds of megabytes, let alone gigabytes. And so I kind of laugh if people say, look, we've reached saturation today and Solana is no longer going to be able to scale. What the engineering team has been focused on is fixing these issues. So when these, whether pricing, whether DDoSing the network, fixing those first to say, hey, when you actually double the block size and increase throughput, as Solana's roadmap has really articulated from the beginning, that you actually get a linear increase in performance, which is a 2x. And then you can do that again and again and again. And I just, like, to me, I don't think people have really appreciated the architecture of high throughput, and the dumbness of it is you increase bandwidth and you increase compute. And that will increase the amount of total throughput in the ecosystem. And it's the same for modular blockchains. Whether it's Celestia, Eigenlayer, their whole goal is to go from kilobytes to megabytes to gigabytes. And then on the L2s, essentially, it's a form of parallelism. If you want to do 10 L2s, it's similar to like an integrated blockchains that just have multi-core performance, but you increase compute. And so again, like, the physics of these systems are generally the same. Sure, maybe you can customize them slightly more if you want to do a completely modular approach, but I generally think the integrated chains are getting more customizable over time too, with like things like token extensions. But we're really still on the precipice of like what these chains can do. There's just been issues. And Solana was the first high throughput blockchain to really encounter what it means when you get these DDoS attacks. I think Sui will go through this, Monad, Aptos. Solana's just, again, kind of pioneering this, and those chains should learn from Solana. But the fact that we're only doing megabytes and we're not doing gigabytes, I think we're a long way from like the actual physical limitations of how hard we can actually push these.
I think Solana got overlooked as well loads during 2021, 2022, because there was quite a bankless themed message coming out that it was only, the message was to increase bandwidth and compute, and missing off the point that it's also to optimize the software side of things. And I think we're obviously hopefully about to see a big improvement on that again with the launch of Firedancer. I was just wondering, maybe through all your discussions, whether you have any expectations for what Firedancer could do for the Solana network. Is it being overhyped, underhyped? How do you see it all going?
I mean, if you look at the Firedancer's pinned tweet on X, what you'll see is them doing, I think, with a four core machine, 22 gigabit of traffic, which ultimately starts, again, it's in my mind another kind of like 1000x in like networking traffic from like where Solana is today to go from like low megabytes to gigabytes. And again, this is why like I'm super excited just about the high throughput architecture, is because we know what the physical limitations are, which is bandwidth and compute. And ultimately the goal of these high throughput blockchains is so that when you increase the bandwidth and when you increase the compute, you have linear scaling. And to me, that's kind of the holy grail. As you throw more resources at these things can actually support it. And so I'm excited about Firedancer. They've demonstrated some pretty incredible numbers. And I think in the long term, it's very much underhyped because the amount of capacity that can be piped through the systems will drastically increase. And I think people underappreciate every time you go from kilobytes to megabytes to gigabytes, you can generally do more interesting things. You couldn't do YouTube on dial-up internet. You couldn't do 4K cloud gaming on broadband, but you can on fiber optics. And so I would say engineers are even just now starting to experiment with what is enabled with high throughput blockchains. And again, that's really been bottlenecked by some of the issues and bugs that the system has been kind of working through the kinks. but I fully expect people to continue to experiment with the sandbox as that sandbox get larger in terms of the possibilities that engineers can ultimately do. And so I would say maybe short term, it's like from price action, it's overhyped because even with Firedancer, increased capacity does not automatically say increased demand. And so even though you have increased capacity, you're not going to get increased demand over generally. I'd be surprised if that happened. But long term, very much underappreciated. I think, again, I'm very excited to see what engineers ultimately do because high throughput blockchains are nowhere near their physical limitations. And as kind of an engineer at Tesla, what they always taught us to do is think from kind of the first principles of physics and push these engineering systems to 100%. And we're nowhere near what you can actually do from like a physics standpoint. And so I'm excited to push the physics aspect a lot harder before exploring these different trade-offs. And I understand why today's software engineers want to explore the different landscapes because they say, hey, I understand this theoretical solution may be possible in the future, but I have a business and that business needs to operate today. And so I don't fault them at all for wanting to experiment with different solutions in the short to medium term.
Let's shift gears a bit and talk about what you're seeing in the venture landscape, what categories or types of companies you're excited about as we kind of wrap up 2024 into 2025. What use cases do you think will start to pick up a lot of steam?
I still think we're at the like early precipices of the trading aspect. One thing that we have been thinking a lot about has generally been how do order books actually work? If you think of Jito as takers of liquidity in the order book, they build a block. They make sure that that block gets to the leader and your transactions ultimately get executed in a certain order. That is generally takers of liquidity. But as I was kind of mentioning earlier in the podcast, I think one of the more underappreciated sides today, and this is largely because there hasn't been enough volumes to justify it, has been more on the maker side of liquidity. So market makers getting involved to actually make markets on decentralized ledger. And so I think we've been trying to really study the decentralized or the traditional finance system and say it's not going to map one-to-one completely, but there may be similar types of scenarios that ultimately play out. And one of the things that we have really been studying deep more recently has been order flow. And I think this is generally probably an underappreciated topic, similar to MEV before MEV debates. I think order flow is probably going to be as impactful, if not more impactful than generally MEV in these ecosystems. And what I mean specifically about order flow is that ultimately market makers want to be profitable. If market makers are not profitable, they're not going to make markets. And if you're either competing against other market makers, if you're competing against bots, generally what market makers need to do is quote wider spreads within the order book because they have less confidence that they're going to make money. And ultimately what this results in is worse execution for traders because market makers are just quoting wider spreads in the order book. And so if you're able to get order flow, which is, for example, Logan wants to submit a transaction on Phoenix. He's doing that through a Phantom wallet or a backpack wallet. If they have high degree of confidence that I am not a bot or I'm not another market maker, they say, hey, this person just wants to be filled. That's fine. If you have a high degree of confidence within that, you can actually tighten the spreads because you know I'm not malicious, but I'm not a bot trying to pick off them and make a small amount of money off each trade. And so what the end result is that market makers can, sorry, what market makers can do is start quoting tighter spreads if they know their counterparty is not a bot or some quote unquote sophisticated actor. And so this ultimately gives retail better pricing execution and ultimately gives market makers higher confidence to tighten their spreads that they will still be more profitable. And what this results in is just higher trading in these ecosystems. And this has kind of been predominant within TradFi for a long time, but hasn't really been explored within these decentralized ecosystems just because there hasn't been enough volumes. And now that volumes with the emergence of meme coins have really started to kick up volumes in these systems, I think you'll now start to see people be more and more opinionated about, hey, where is this transaction or flow coming from? I want to know if it's a bot or not a bot. If you're not a bot, I'll give you tighter execution. If you are a bot, that's fine. I still want to trade with you, but I'm just going to have to give you slightly wider spreads because I also need to be profitable as a market maker. So to answer your question, Sal, long-winded answer, that is one area we're specifically focused on trading. And I think the order flow is a very underappreciated category. The flip side of that is moving up the stack to applications. And we're very excited about DePIN, but I don't know if we want to chat about order flow first, or if you guys have any questions there.
Just a quick follow up on the order flow piece, because I think it's interesting. And what you're referring to is like we can essentially give better pricing if we know that the order flow is not toxic. It's just kind of like an end user, not just someone on Wall Street or a bot or something like that. The other piece to that though, so obviously you can invest in the infrastructure to support better trading on chain. The one trend I'm curious to hear your thoughts on is just, I guess, the lack of lots of protocols tokenizing assets on Solana specifically. Like I feel like that real world asset trend has really been mostly kind of an EVM thing. If you look at all the top protocols that have lots of tokenized assets, right? Like your makers of the world, Pendle, Goldfinch, there's probably a bunch of others I'm forgetting. But whereas I haven't heard that really kind of resonate with building on Solana. There might be a lot of reasons for it. Could be just awareness. Could be that there's a lot more infrastructure for like, I don't know, tooling, wallets, custody for ETH versus Solana. I think that's changing. It's getting to parity, but I wouldn't say it's at parity today. Do you think that kind of demand side for, obviously you can have the best infrastructure to support trading in the world, but if there aren't like things to trade on the chain, then, it's kind of a moot point. Like how do you respond to that?
I've been talking with a lot more institutions now, and I would say these people at institutions are humans. They're generally biased by other people's opinions, and the wanes in sentiment also does affect how these institutions ultimately think. They're just not as quick to pivot the ship. And so, as we were kind of alluding to, the high throughput blockchains have really only become in vogue, I would say, within the last 6 months. That's not much time in TradFi world. But in my conversations with them, I think the conversation today is still very much Ethereum, but it's also and Solana, where before it was Ethereum or Ethereum L2s. And so I think that is shifting. I would love to see meme coins have been great to bootstrap volumes. TBD on whether meme coin volume can sustain itself. I don't know, but I would love to see trading pairs. I would love to see equities, more and more things move on to high throughput blockchains. But again, that ultimately has to come back to my point about I actually do think these blockchains can enable better price discovery. People are not going to move assets on a blockchain just to move assets on a blockchain, get worse execution, and like worse slippage. Like it has to be a better product. And so there's been a lot of things that have ultimately kind of been building up to this, but it's, in my mind, been fixing the infrastructure so that application engineers can focus on applications. And like, to be clear, we're still like working through that. I don't think we're done by any means, and that's evident to some people are exploring different layer twos. And so I think these large institutions are very excited specifically about Solana. They're a little bit more slow moving. It takes them probably at least a year to get people on board to do anything in blockchains, and probably another year to say, hey, this is our blockchain of choice. And so I think, in my opinion, it's more of, if we can continue to onboard more and more users, and this is kind of comes back to like the DePIN, why we're so excited about DePIN, is because I think that is a very clear use case for building better products, not better crypto products. And if Solana ultimately becomes the place for DePIN that just has the most trading volumes, has the best products, and people can point to that, everybody's always said, where's crypto's product market fit? And people have historically only been able to point to stablecoins. If they can point to stablecoins and a hive mapper of the world that is saying, hey, this is actually a better solution than Google Maps or a Helium or an Adreno of the world. Hey, you're building a wireless carrier that's actually better than what I have in the past, or with Adreno, lower costs of internet access that has higher internet speeds. These are actually better products. And so I kind of think with these blockchains, you're going to have a very high power law outcome, because like liquidity begets liquidity, more users will beget more users. And historically, that's all lived on Ethereum. And then you just fragmented that with all the L2s. And that's why you're seeing a lot of the confusion with the EVM community, where Solana has particularly said, hey, trading will happen here, DePIN will happen here, NFTs will happen here. And the more and more people that kind of migrate over there, I kind of feel like it's going to be a black hole, because it's just like, oh, Solana was the NFT chain, Solana was the meme coin chain, Solana then was the DePIN chain. And then Solana was just like, this is the chain used to build applications. And that really is just a function of, are more and more people using the blockchain? I think application engineers want their products used. Institutions want their products used. And if they think they can build a better product and it's sound from a technical standpoint, and they have a high degree of confidence that it will continue to scale, they will shift.
Yeah, I really don't understand the confidence that some people have of still saying, Solana is going to die after these meme coins are gone. Because maybe they just weren't paying attention for the last 2 years, but this is like the 5th narrative that we've had on Solana, and the community stayed through it even post FTX. So I don't doubt that they're going to stay through it, even if pump.fun revenues start to reduce a little bit. I just wanted to go back to the MEV point that you were talking about. And I think it links in with what an argument that I've been seeing on Twitter recently, which is, historically, Multicoin have said that L1s will predominantly be valued based off the amount of MEV that they can accrue. And that's specifically because like the base fees are just going to be dirt cheap, because the actual cost of doing transactions from a validator's perspective is very, very, very small. And so you can't really charge very much. So all you can really charge for is this contested state piece where people are prepared to pay a premium. But increasingly, people are saying, actually, no, firstly, MEV, basically, we should try and minimize it as much as humanly possible. And the second point is it's going to be captured by applications and not the L1s. And then if that goes, then maybe all we're left with is this very dubious monetary premium argument. So how do you think the value accrual, I suppose, of L1s is going to go, and where's that MEV value going to be captured with relation to things like order flow that you were talking about before?
I tend to directionally agree. I mean, minimizing MEV is like minimizing gravity. I think they're just going to exist. I think what people have a hard time today with is like the monopoly of MEV for the single leader. And this is why I think ultimately you have in the end state multi-leader ecosystems that make MEV competitive. And in reality, when you remove monopolies and start making things competitive is generally where you get much better price discovery. And really all blockchains have been single leader systems. I think Sui actually may be the first to I don't know if it's live yet, but within the next like couple months should have a multi-leader system. And I'm very curious to see how that goes out. Solana though has been saying this since really day one with Anatoly that they want to be a multi-leader system. Ethereum now is kind of the resurgence of make Ethereum great again, and trying to do the multi-leader ecosystem. So I think priority fees in general, if you can in parallelized blockchains, if it's non-contentious piece of state, are fairly trivial. They're like fractions of a penny, if that. And then for priority access, I guess you will always have people that are going to pay up to some economic value to do that ARB. But I think within L1s, it's probably going to be a combination of MEV. I guess one thing that I'm still trying to figure out is if these things actually enable better price discovery than, say, a central limit order book, and majority of trading actually happens on these high throughput blockchains instead of a New York Stock Exchange of the world. The thing that is kind of always pointed to is like the SEX to DEX ARBs. And I'm curious today that is kind of inverse where 99.9% of trading happens on centralized exchanges, but a very small fraction of the total trading is done on blockchains. But if you flip-flop that, then I'm curious just to see like where the different arbitrage opportunities come from. If people are just saying, hey, the only ARB is going from a SEX to DEX. I still think within these ecosystems, long-term, the value is generally the platform that it creates. Kind of the fat protocol thesis-ish, but the value of the underlying blockchain ultimately should enable applications to make a significant amount of money and capture some form of MEV. And I think in the past, people often stated that you need your own L2, you need your own app chain to capture MEV. And I just don't think that's true. More so what we've seen is, hey, you can just encode in your logic of the smart contract, I want to keep this amount of the revenue or MEV trade if this happens, especially with things like token extensions that makes the underlying blockchain more expressive. And so I don't know. To answer your question, I think we're still trying to define this as an industry. What I'm confident about is that these blockchain ecosystems can actually enable a better product of price discovery. I think blockchains are useful for global coordination. The platform that these enable will ultimately be valuable, and you'll have very valuable applications that sit on top of it. I kind of reject the premise that you need your own L2 or app chain to capture all that value. I think there's going to be a lot of value in having opted into that shared set of standards with others and having access to liquidity. But I don't know. It's a hard question. And I think one of my superpowers has been saying, I don't know. And this is still something that we're trying to explore and grapple with as an industry. I think MEV generally makes probably the most sense, but we should continue to pull on that thread and explore it more.
You mentioned earlier when we were talking about themes you're excited in, DePIN's one area. I think we've talked about that topic a decent amount on this pod, but wondering, are there any exciting projects or verticals within DePIN that perhaps are underexplored that you think could become really big?
We generally look at it from a markets perspective. So trying to understand, hey, is this a $10 billion outcome, 100 billion, or a trillion? And today, the largest markets just globally have traditionally been compute, kind of like the AWSs of the world, uh, telecom with both wireless and fixed internet, home internet access, and then kind of energy. And so those are kind of like the broad ones that we've been spending more and more time on. Um, a lot of people are experimenting with like the decentralized GPU networks, particularly around inference. I think training is still kind of out for whether you can do neural network training on decentralized compute clusters when historically those were all co-located in a single data center. Similar to blockchains, you have bandwidth issues because of the communication overhead from decentralizing kind of the hardware stack. I am generally, though, fairly excited about one of our recent portfolio companies called Adrena or Dawn. What they're focused on and what ultimately they figured out was that data center internet is very cheap. For probably the amount of internet that you use per month is you pay, say, $80 to $100 for Comcast, Verizon, whomever, your local ISP, but the data center internet is actually like 50 cents. And so there's a huge arbitrage opportunity if you can figure out how to get that last mile of the data center internet to your house in a fairly low cost manner. And that has been expensive for a variety of reasons because you need to actually wire up the building, that last cost of mile transportation, figuring out the logistics of all the wiring and tunneling, the permits. That is expensive. But what Adrena has ultimately figured out is that you can use a similar technology to Starlink, where essentially you beam internet access from one point, which is the data center, to residential buildings, and make it wireless. And this has only become possible recently because you have multi-gigabit, essentially wireless communication channels that allow you to do this at high speeds. And so, again, coming back to like why I'm excited about cryptos, not better crypto products, they're just better products. And this ultimately is enabling 50-cent internet per month with a slight markup, say $10 or $20, than $80 to $100. And that's actually a better product. And so I'm generally excited about those type of applications. With Hivemapper, you can squint and see, hey, if I have this dash cam in my car and I have enough people actually doing that, I can very easily squint and say, this is actually going to compound at a much higher rate than someone that's paying a couple $100,000 a year to drive Google cars around that only get mapped once a quarter at most likely once a year or every other year. And so these systems that incentivize people to do interesting things that actually create better products, I'm really excited about. I think it's probably overhyped within the crypto sphere, but it's underhyped from like a product space and long term. It's kind of maybe the opposite of Firedancer. I mean,
one quick follow up there, because I hear this thesis a lot that DePIN can kind of create better products. I agree. Like Hivemapper is a very clear example. If you have a bunch of people recording, they're driving, those maps by definition have to be more up to date. And I think there's been some tweets out there where, like a Hivemapper map caught a construction site and rerouted someone, and Google Maps was putting them right in an area where that wasn't even drivable. So that's great. My question though is the moment that these things go mainstream and these giant corporations realize that this is a good idea. I mean, what's stopping Google from creating a loss leader hardware product, giving it out for free, and then now it's a well-known name, and maybe they, I don't know, decide to launch a token or have some other incentive system that's off-chain where they get points that they can redeem for something, gift cards or something like that. My question is like, can't this playbook be replicated and actually be replicated better by a corporation with deeper pockets? And the end state is still kind of the same. The consumer gets a better product, but like, how do you think about the business side of that?
And I misspoke on my last thing. It's similar to Firedancer that it's overhyped in the short term, underhyped in the long term.
Mhm.
Yes, I mean, all these things are competing on products. The more people in there, I think generally the better the competition. Hopefully, the better the product will be. I think the unique unlock though is if you're a pure play, quote unquote, DePIN company, part of that is pushing the CapEx onto that community. And there's pros and cons of that, but your balance sheet looks much different than a legacy kind of Web 2 company that already has a bloated balance sheet. And so sure, they could come in, either pay people more or just subsidize the cost completely and pay. And maybe people do that, but maybe there's a structural cost advantage to just being pure play, DePIN projects that the community essentially opts into running that infrastructure for you, and you're rewarding them through ownership of the network. That pure play aspect, I think, is kind of underappreciated. What we saw in like the early internet days is there's a lot just companies that were brick and mortar that tried to adapt to the internet, and those were generally less successful than the companies that were just like pure internet plays. I
Right.
mean, Amazon versus like any bookstore.
Walmart. Kind
So
of. Yeah.
and so I think those cost advantages are just underappreciated. Now on the flip side, it makes it harder to bootstrap, or not bootstrap, but you still need a leader or like to move in a general direction and get everybody aligned by that. And I think some DePIN founders just think like, hey, let's push everything to the community and then like, let's
Right.
kind of back off. I don't think you can
Doesn't
do
work.
that. You need a leader in both regards. And perhaps the more centralized kind of traditional companies of the world are just have better leader structures. I think what I'm personally excited about is generally some of these Web 2 founders that have a lot of domain area expertise in a telecom, in a networking, in a mapping solution of the world, and just figured out, hey, crypto actually enables me to build a better product, and I'm going to come over to crypto because of that. And that was very much the case with Andrina. I think Neil, the founder, was skeptical of blockchain for a long time. He's like, why do I need this? The Fugazi. And then you kind of slowly get crypto pilled and be like, oh shit, this actually makes better sense. I can build a better product. So I think that is probably going to happen more and more instead of maybe the more, in my opinion, I'm interested to see if it's going to be less crypto native founders that are trying to say, hey, I'm going to build a decentralized energy grid versus like a seasoned person that has spent the last 10 years knowing the ins and outs of different energy grids and saying, hey, if I throw crypto onto this, I can use that as the back-end coordination network to actually scale my business.
It is a really interesting question that Sal has posed. I just think that the corporations are never going to be as cheap as the startups. You know, obviously their operational costs are just going to be way higher. In Sal's example, they'd be buying all of that hardware themselves rather than getting users to buy it themselves. And crucially, they're just not going to want to give away equity. I just think then they would never be prepared to give up that control. And so they're always going to try and, as you said, do like gift cards, which is going to cost them money. And ultimately their costs are just going to end up higher. And also it's so easy to spin up a competitor like crypto competitor because you basically need very little startup costs, don't you? You're just incentivizing them with equity, which you've magicked out of thin air, basically. So I think one of the great things about DePIN is it's just going to allow these industries, which traditionally have been nigh on impossible to break into, to suddenly have a lot more competition. And yeah, I think that has to be great for the customers. How about energy? You've mentioned that before. I haven't really heard many projects work in that area. We hear a lot about compute. We hear, obviously Helium and Hive Mapper, but energy is something which just sort of fallen under the radar for me so far.
Energy is interesting. There's a lot of teams today trying to tackle it from like a data perspective, saying like how much, if I can collect data on like your computer is using this much electricity, your AC is using X amount of electricity, is that data valuable to sell to data providers? I'm less convinced about that, but that's generally kind of where we have seen things fall within the decentralized energy today. I think the holy grail of that is ultimately people have batteries, people have solar, and you can kind of create new energy grids by having these buy and share power between them. I think that is probably a little bit further away because batteries generally are still a little expensive to have home storage. Solar obviously is coming down as well, but still a little bit expensive. I would be very curious to hear from people that are trying to figure that out, both from a cost and structure standpoint, but also a regulatory standpoint. Energy generally is very regulated, and there's a lot of legal hurdles to jump through with that. And so energy is a massive, massive market though. And I'm sure someone will take a crack at it. I think the first people that start to figure out how to buy and sell energy at a more localized scale and using blockchain as the backend kind of coordination rails will tap into something fairly large. But again, that is a very hard challenge from a regulatory perspective and legal perspective, which I'm kind of bullish the more quote unquote boomers coming in and building these than kind of the crypto native that is kind of just now saying, hey, I'm going to build these decentralized energy grids.
I wanted to get your thoughts on just a few other ecosystems, some which are in that category of high throughput and some which are not. Let's start with the high throughput ones. I mean, what has been your guys' reaction to the emergence of Monad, MegaEth, and some of these more ETH aligned, but kind of borrowing some of the ideas from Solana and other chains?
Super bullish Monad, if you could probably go back in history and redesign Ethereum, it'd look like Monad. You'd have parallelization, you'd have high throughput. It's unfortunate that ETH kind of ended up in the spot that it did, but understand the reasons why. I think it's interesting. When you're designing systems from scratch, you're going to always be able to take some of the best practices that you've seen from other chains and do those as well. So I think from day one, they'll do asynchronous execution, which is interesting. But by strictly keeping the EVM, you're also working with some of the limitations of the EVM. And so I'm curious how Monad will balance that long term. But to your point, Sal, earlier, the EVM has a lot of applications. I don't think those necessarily die. I think, in my opinion, for continued scaling, you probably want to move to something like Monad. I think MegaEth is interesting. I'm actually doing a podcast with them in person here tomorrow, but I'm very curious just about the latency games. When you push block times to say a millisecond, it's not that you can't do it. You obviously can do it, and we've done that in TradFi for a long time. I think it just hyper optimizes people to be co-located, especially for financial applications. And maybe the pitch is, hey, we think this is the best way to do trading. And on a single sequencer, we can push block time super low instead of you trading on the New York Stock Exchange, you trade on MegaEth, and MegaEth is just open in terms of, hey, you can verify that this is executed correctly, and that is a better product. But you still have co-location. And maybe it's slightly a better product. I don't know. You can obviously do some interesting things if you're co-located to the sequencer, but on the flip side, if you're not co-located to the sequencer, you're always going to get front run by someone that has better information than you. And I think that is kind of the bigger question in my mind is I want to get away from people having information advantages. And this is why I'm really bullish on the multi-leader end state of these ecosystems, because I think you can actually do a better product than what currently exists today because of the limitations of speed of light and just newsworthy events propagating through the world. So I don't know. I appreciate these experiments being run. I think if you were to push L2s to their logical extreme, what they would look like is the New York Stock Exchange. You would have them a giant single sequencer. Everybody would co-locate around them because you want that information arbitrage. So I think it's an interesting experiment. I think we probably should have run it a lot sooner, and I'm surprised MegaEth is the first one. A little bummed like Base or Arbitrum Optimism haven't done this sooner, but interested to see how it plays out.
And the completely unrelated set of ecosystems, but I just wanted to get your quick takes on these. We're hearing a lot about Tron these days, not just because they have a lot of usage with stables, but also we're getting a bit more usage now with trading. I think a lot of it just has to do with meme coins, but it's interesting because there's just a lot of capital there. And then kind of ancillary to that is Telegram and Ton. And I think, after the arrest this weekend, there's been a cooling in terms of sentiment for Ton, but certainly like they have applications that have garnered tens of millions of users. What has been your thoughts on these two ecosystems that clearly have usage, but perhaps I think both of these chains are not very scalable at all, as far as I understand.
Tron and Ton.
Mm-hmm.
I haven't dug too much into Tron's architecture. I know Ton, though, does a form of sharding. And
Okay.
I think one of the interesting things about these ecosystems for me is having that single shard. The more that you fragment the state, I think generally the worse price discovery that you'll have. You can kind of think of sharding as a form of different exchanges around the world, where you have the New York Stock Exchange, the London Stock Exchange, Japan Stock Exchange, and there's a lot of MEV between those because they're not one ledger. And when you have sharding in a blockchain format, I think generally you're going to just have worse price discovery because different shards will reflect different prices. And so I'm just not a super big fan of the sharding design, especially kind of going back to what we've talked about is I think these blockchains have just gotten to low megabytes and they have not even tested gigabytes. So there's a lot of performance left to ultimately push these. I'm not totally convinced that the distribution of Ton is going to necessarily translate to blockchain adoption. Maybe they do for like simple token transfers. And we saw that on Tron with like just payments. So maybe that's sticky, but I think for generally trading, I have a harder time seeing how that ultimately manifests on those different ecosystems. And I truly think the winning-ish blockchain will be the one that kind of becomes a more black hole where there's more users, more applications. You can interact with, go long Tesla or short ETH or play a blockchain game all within one ecosystem. Think less about hopping from system to system. And the more that you have the more and more users that kind of coalesce there, I think it's going to be a compounding effect. And this is why, again, I still think it's too early to say high throughput blockchains have won, even though I think they're directionally very correct in the architecture design.
And maybe quick final question. Do you think ETH needs to scale the L1 to remain relevant in the long term?
I think you need high throughput data availability. And if Ethereum does not do that, then I don't see how they're going to be as relevant long term, because you're always going to hit blockchain saturation at some point in time. And the only way to decrease the prices is to increase block space. Even if you use 100% of that blockchain for block space for data compression, that's fine. You're just using that block space more efficiently, but you're going to start having resource constraints once you butt up against those limitations, which is why I've always been a fan of the more dumb version of increasing block space, increase compute. Ethereum in its end state wants to get to 1.3 megabytes per second, and that's kind of roughly on the order of where Solana is today. I don't think that's going to be enough. And so I think they should think very hard about trying to make better products. You can still keep the properties of decentralization, but I think where they ultimately went wrong is optimizing for solo stakers instead of just people to create the best product experience. You can still have a very high decentralized network, even if the computer costs $5,000 instead of 500. It's more so around the number of replicas geographically dispersed around the world. I think they really went wrong with focusing on the solo stakers. And I think they're just going to have to do a little bit of soul searching, especially to kind of continue to justify the valuation that they're currently at.
Makes sense. I saw a tweet recently from, I think it was David Hoffman on, yeah, let's make it so that the last 2 generations of MacBooks are approximately like the hardware requirements.
But I mean, to me, that's funny because that's, again, this is more of like the capitulation that I was starting to see.
Yep.
Like these, it makes no sense to run things from 10 or 20 years. Yeah. And like internet is generally getting faster. Like when I first moved to Miami, I had 1 gigabyte. Now it's 5 gigabytes.
Oh my God.
Like at data centers, you have 20 gigabytes, and some of the newer data centers have 100 gigabytes. So like in a couple of years, I'm sure you'll have a terabyte. And compute will continue to get faster. You'll get more cores on a single chip. And so I think just betting against humans and the progress is not good. And you should just naturally lean into increasing compute and increasing broadband. And if you don't, I think it's going to kind of be shooting yourself in the foot, because you have to rewrite the technical software system every time the system throughput doubles, instead of naturally writing the software to say, hey, we know that compute and bandwidth are generally going to double. Let's write the software stack so every time it does double, we don't have to rewrite that software stack. I think was the fundamental shift that Solana really highlighted and now is pioneered by a couple other high throughput blockchains.
Yeah, put differently, you get free scaling guarantees just with Moore's law, advancement of technology broadly outside of crypto, which is the brilliance of Solana, I think. Amazing. Well, this has been a super fun convo, Logan, very comprehensive. Always enjoy having you on, or rather you guys. We had Solana Legend on a couple of times. Always some fun takes. And yeah, looking forward to running this back again soon.
Appreciate it, guys.